Welcome back, and joining me for a look at the day's markets moving news is Odwa Magwentshu from Trive Investments. Odwa, thank you so much for joining us today. Now, global markets have been pretty mixed this week. Yesterday, then we saw the S&P reach a record high despite there being no real catalysts moving markets, right? We're seeing earnings season playing out and expectations around the next monetary policy moves, right?
Correct, yes. As you rightfully said, the markets reached all-time highs, the S&P 500 in yesterday's trading session. As it has been for last year, I believe that the major factor which leads to this, the S&P 500 has been the Magnificent Seven, as people like to call it, which are your heavy hitters who are performing very well in this in the last 2 years, and I think that's what's helping that particular market at the moment. In terms of interest rate cuts or Federal Powell's comments, I think right now we could see it being delayed in terms of a cut. However, at the moment, even with inflation, which we're waiting for next week, things do seem a bit cool. So we could see, the market stay with the rates as is for a bit longer. However, in terms of cuts, we might be waiting for a while going forward.
You know, Odwa, I've been crossing my fingers, my toes, everything that can be crossed for those rate cuts. And Powell definitely dashed our hopes yesterday in that interview. I want to now talk about earnings season in greater detail. Now, we've had numbers from the U.S. corporate scene, and they've been quite good. We've seen those kind of earnings come throughout most of 2023. Tech stocks making gains on the back of that AI boom. We saw the banking sector out in the U.S. also making gains on the back of these high interest rates. Now, with the macro environment somewhat changing, do you expect these record-beating numbers into 2024?
At the moment, with all that's come out at the moment, there's nothing to think that that's not going to continue. We do seem, I do believe that, yes, we're still going to have some great numbers coming out of the US, especially from them benefiting from the AI boom. And I have to say, some things that a lot of people aren't, focusing on is that there's a big fight with the US and China, which the US is trying to get that dominance in the AI race, to try and if you may, suck out the competition from China, any oxygen there. So in terms of, will we see this continuing? I do believe for the US, in terms of corporates, yes, I do think that the corporates are doing very well at the moment. These guys have so much money, cash on hand, that high interest rates don't really matter to them. And, the clientele is still growing very strong at the moment.
Now, in company results, L'Oreal delivered a near 7% rise in fourth quarter sales, but this missed analyst expectations. They've pointed to issues playing out in Asia, which have hindered growth on that end. Odwa, L'Oreal not the only beauty company struggling in China. Recently, Estée Lauder also announced plans to cut jobs on the back of slowing demand in that region.
Yes, China, was the underdog for so many years, and they've given us an expectation, or the reputation showed us, they were someone to look at. However, ever since COVID, it's all been downhill from there. And in terms of China, they are trying to change the trajectory, with the government starting now to implement some help into the economy. However, if you look at the Chinese economic data, the macros, everything is still going well. They're in a deflation environment. Production is not great. Expectations not great. Even the property sector is also struggling at the moment in China. So China was a great place, especially for luxury brands such as, you mentioned L'Oreal, but also your LMVH as well. So China right now, even for South Africa with our platinum miners, we were hoping for China to reopen much stronger so that we could benefit from that great economy. However, the story is right now, China is not as reliable as it once was.
Odwa, do you not just think then maybe perhaps markets could have overestimated that COVID-19 rebound?
100%. That is without a doubt. I think that they anticipated everything was going to be as usual. However, that has not been the case.
Let's get into some local company news. Sasol has warned of a decline in earnings, citing macroeconomic issues and falling oil prices. Odwa, what did you make of that trading update?
I mean, it's kind of what we've been expecting, to be honest, here in the trading desk when it comes to Sasol. Sasol is just in a terrible situation right now, as they said, with oil prices and also with load shedding and also the railway system. I do think that Sasol is still going to be continuing in this terrible position that they're in. There was hopes, especially with the conflicts, that oil prices will go up. That would then benefit Sasol. However, that hasn't picked up as much. So for the business, not only is it tough to run the company in South Africa because of infrastructure issues, but also external issues like the rand's not weakening too much and oil prices are not going higher. They are it's understandable with the trading update they released.
Now, before I let you go, we had some exciting corporate news. MultiChoice rejected a Canal Plus takeover deal, further saying it undervalues its assets. It's also kept doors open for further deals, but in a surprise move, sometime this week, Canal increased its stake in MultiChoice to that 35% mark, hitting that all-important threshold, which kind of forces Canal to make a mandatory offer to other shareholders. Has this instilled some sort of nervousness when it comes to that MultiChoice Canal Plus deal?
A little bit of nervousness. It's just not as clear cut. However, I do think it's also a great negotiating tactic from MultiChoice side to try and get more value for the, or putting more value to the business themselves. I think it's just, in my opinion, a way for them to try and get the most as they can before handing over the business. So I mean, if we are able to get more. If they are able to get more, I think it will be best for them in that sense.
Something we'll be waiting on and seeing how it develops. Now, what are you hanging your hat on? What's your stock pick?
Well, today I have to go with one of the Magnificent Seven. Microsoft is my pick today. Microsoft has been having a great run last year. However, last week they also released their results showing great growth. Showing about 18% in revenue and net income 33%, and this is after they absorbed Activision Blizzard. So this brings in the gaming side of the business. It brings everything under one roof. So I do believe that Microsoft has a much more promising future going forward, and that's why they're my choice. Even though the PE ratio is quite high, that's why they're my choice.
Alrighty, Microsoft it is. We have to leave it there. Thank you so much for your time and those insights. That was Odwa Magwentshu from Trive Investments.